Hey, Hotep there. Yeah, Hotep there, brother Will. Yeah, I had uh I had it off. I had to run to brush my teeth and then get up for the morning. I am so tired. Man, yesterday I worked out like there was no tomorrow. I mean, just a serious workout. Um yeah, basically I started out with my standard, a couple sets of burpees. Then I go into cage deadlifts, and I'm trying to get to. Let's see if I could do this. Let's see, that would be. I mean, I could do 250, and I'm trying to get up to 350 just to do as many reps of 350 cage deadlifts. Because if I could get up to 350 in cage deadlifts, then probably by December I'll probably be up about 400 and just regular cage deadlifts. Which means that if I do that, and then I went in from there to do my and I'm talking doing reps, not just one, just doing reps. And then I went into my weighted pull up, weighted push up, weighted push up, weighted pull up sets, and I'm trying to get to with body weight, um, with body weight by December, by Christmas. I'm trying to do 3 plates. So 3 plates, it'd be about with body weight about 300 pounds with body weight. So, and I'm so tired. I mean, every time I do that, when I do this kind of a heavy set, I get very tired. I just get really, really out of it. Anyways, looking at we're gonna move those deltas again on X. But yeah, the other video on SCMI, man, I was just like, it was just too much for me. To in terms of buying power, it was just taking so much buying power. Let's see something. Even though it came down a little bit today, I wonder just how bad it would have gotten had I stayed in. I always do that. I just like to see exactly what the cost would be if I'd stayed in. Okay, I would have gotten back uh about 60, 70 bucks had I stayed in. But you never know, because at the end of the day, the cost went up. So it was 838 is what it cost me to buy it back. At the end of the day, it was like 860. So, you never know what's gonna, I mean, it's like one of those things. Get out while you can. You're glad you get out. IV rank is still kind of high. That was definitely it was a painful trade, very painful. It skyrocketed out of nowhere. So I mean, stuff like that happens. Anyways, looking at their markets, and hopefully we have sound. We should have sound now. Looking at their markets, yeah, I'm just torn up out the frame right now. I mean, just really, really tired. SPX. Okay, yeah, SPX is down. Again, volatility plays. SPX, bonds. Okay, interest rates are up a little bit. Nothing major. Everything's pretty flat. SPX is, I mean, this has been a really flat range after the Trump rally. Things are ranging a little bit. I still think that markets can have a tendency to go down. Let's go to VIX. Okay, VIX is up a little bit. All right, no worries. Okay, let's go to. We looked at inventory. The only thing on inventory that I see that I have to really be careful of on the inventory is X, because we're at 17 deltas. So we're gonna move that up a little bit. We're gonna see what kind of deltas we could get more credit. See if credit comes in. One of the things to be very careful of is when you're doing this, it could actually snap back on you. Okay, there's really no volume on this. But if we came up to see if we went to the 23 delta, see there, I mean, look at that 192, 213. There is really there's no No volume on that. 157 is 20 cent spreads. My goodness. Well, since it's a 20-cent spread, I'm not really scared. I'm just going to see if the market could come to me. That's what you do when the spreads are really wide. You don't hit it just right there. You try to make the market come to you. If it does, cool. If it don't, cool. Main thing is just being able to see if, basically if that market comes to you, you're in a good position. That's basically all it is. Okay, ARK Invest. We were up considerably. We're 55, 56. So let's see if we drug this and we rolled that strike up. Let's see, this is a 20, 51, 53. So if we drag this up to 52, to the 52, how much would that be? To the 52. Oh, 11-cent debit. So if we drug that, 25-cent debit, we can't do it. Okay. We can't do it. I was seeing if I drug this strike up, if I drug it up to this 98 110, yeah, we're gonna sit on that for a minute. If we were to get a credit, then that would be a free trade, but it's not. Yeah, but it's not. This thing would have to go up quite a bit on ARK Invest, and that's the Bitcoin stock. ARK Invest. That's your that's the Elon Musk stock. Excuse me, the Trump stock. And the reason I say that is because she's good friends of Elon Musk, Kathy Wood. Okay, 43.26 on the EEM. We're still hovering around that, that strike, GDX. Okay, the other ones, the marijuana stocks, those are just basically lotto tickets. TLT VIX. VIX, I'm just sitting on that. XLF, that's doing nothing. Let's see what we got. That one was January, what was that? Calendar. January calendar. So the 17th by the next month. So that's something. Let's see where XLF is headed. Yeah, I mean that's just ranging. So I'm not mad at that. We're getting 18 cents, which is nothing per day. Good thing about X is we're getting $13 a day on that one. Even though that the deltas are really hurting me, at least I'm getting 13 bucks a day. That means the volatility's still up there. But let's see. Yeah, I'm gonna see if that market could come to me because the bid-ask spreads are just so wide. And I'm not totally pissed off on it. One of the things is the cost to hold the position it's kind of high. Again, that's what happens when you have volatility. Same thing with the SCMI, which I was going to re-up on that, but I don't want to spend that much buying power. Anyways, let's see if there's any trades. The other one, oh wait, let's see, we still got inventory. Boeing and KRE that never got filled yesterday were the other two that I put in there that never got filled. See, Boeing and KRE. KRE, this was a Condor. Cheap Condor. Okay. It's up in my wheelhouse, which means I could actually make it go higher. See if it'll come. If it gets filled today, it's down 30 cents. Let's see. Trade, curve, analysis. I'm just seeing if it's, it's pretty close. I mean, my deltas. 60 cents, 136. I'm not mad at it. I'm not mad at it whatsoever. Let's see where our strikes are. This is a January 17th. KRE, 24%. Okay, if I did this, I would have to move this down. And again, there we go. There's no volume on that yet. 60.58 strike. Yeah, there's no volume. And see 18.13. 2014, that would be more like this because it fell a little bit today. 55, 59, we're going to see if it'll fill us. 59 of 145. Okay. We're a little bit over a third of the width of the strikes. Boeing. Let's see, that's KRE. Let's go to Boeing Airlines. Same thing. At 167. Okay, it went down from yesterday, so volatility came out of it a little bit. So Boeing, let's see. Boeing is up 80 cents. Let's look at the chart. So, yeah, volatility got crushed a little bit. So we're going to stay out of Boeing. How about Delta? Delta Airlines. 84 rank. Delta, let's see where volatility. 5-day index. Let's see, Delta went up by 0.5%. IV rank 85, that's great, or 86. And IV index 45. Delta, if we're looking up here, Delta's definitely, the only thing is it's soared so much that this thing could actually go down to like 58, has potential of moving $4, easily can move $4 on you between now and January. If we were to trade this, let's go and look for some trades. Oh, earnings. I'd have to do this to the December 27th, but you've got January earnings, and I don't like to be around in earnings. You don't see as much as a pump in volatility, but there is one, just a little bit. So I wouldn't want to stick around. So Delta's out of the American Airlines. American Airlines. Okay, there's no earnings. You've got IV index of 48. IV rank 39. 2.5% 5-day change. I don't mind that. January. Let's see if there's the king. Well, not enough. Well, there is granularity in the strikes. You get $1, but see on the 15 delta, see there's no volume. 15 delta, if we went to the 28, that gives you a 54% chance it'll get hit. I don't like that. Let's go to, there's a lot of skew to the upside. Look at the granularity of the wait, there's 17 delta, my bad. So 17 deltas, 15 deltas, 43 at a 228, there's nothing there. You do have a 90% chance that, there's really nothing there. If I did this, even if I did it at 50 cents, there's really nothing there. But I'm going to do that. Because there's no volume. There's no volume on this in the January. Thinking if I did this as butterfly, thinking that Delta could fall. There's no volume. The only thing if I did it a butterfly would be at a 2 delta. But there's no volume on the other strikes as a butterfly. So this one, we're just going to stay out of this one for a minute. Let's see what else we have. Because if there's no volume getting in, there's going to be no volume getting out. That's the thing that's scary. What do we have for open interest? Got a lot of folks are holding on to these contracts. There's a lot of contracts folks are holding on to, but there's nothing being traded. So, so I'm just gonna, that's how many open contracts there are. So let's look for new trades. All right. IV rank, high options volume. Hold on for 1 sec there, Brother Will. Okay, we're going to see some new trades. See, before we go to high options volume, let's go to liquid ETFs. Yeah, so liquid ETFs. Okay, GLD already got a gold trade. EWZ is still holding it, and actually volatility is going up on that. What is going on with EWZ? It's getting crushed. This thing could easily get down to 26. It can move about $1 a day. It could get to 26 just because that was a low that got hit back in July, and it's already trending down. So more than likely, either 26. It could easily get to 26 or 27 or 26. Moves $1 a day. An ATR, double the ATR. Let's go to liquidity. Nothing. Well, let's wait for it to see if it'll populate. There's nothing on EWZ. Let's go to our deltas. 13 is the closest. What, 3 contracts? There's nothing there. Though you have 2-cent bid-ask spread, I mean, it's not terrible. I mean, that's not bad. 1 penny bid-ask spread, that's not bad, but there's no, that's a 5 delta, excuse me. But there's no liquidity. There's nothing there. 34 of 272. Of course, you're not getting any money for this EWZ trade. And I don't want to do it in December because it's too close. Let's see, what do you got here? The other emerging EWW, Mexico. I believe that one is Mexico, yeah. Is there anything in Mexico? Liquid ETFs, nope. Granularity of strikes, no weeklies. And this right here, there's nothing. These strange numbers tell me there's nothing. You look at the bid-ask spread. Yeah, so there's nothing in January for EWW. The SMH, we would have to condor it if we did that. Outside of that, I'm not seeing any. Why is SPY not in the liquid ETFs? That should be the most liquid ETF. Let me see. Wait, I know why. Filters. Let's see. Earnings range, exclude earnings within a range. Show all. IV rank filter. We'll take it down. You know what? I'm gonna take the IV rank filter off. That was for stocks, what we were doing for stocks, and that's why we didn't. That's why. See what else we have in terms of liquidity. I'm gonna take the liquidity down because I'm just filtering it pretty heavy. I just want to see if there's more stuff out there. Yeah, so there we go. SPX. Okay, XOP. Not enough contracts. 200,000 in the volumes. The chances are, and I love XOP. I've been trading that off and on. That's energy. That USO I don't normally trade, but it does fit the volatility. It just doesn't have enough contracts for me. Let's go to January. It does have granularity there. Yeah, there's nothing here. January. See 21 deltas. Actually, we will go 19. Let's go 19 deltas. But there's really nothing here. We're 2 deltas, 220 out of 2,000. Yeah, that just tells you 1/10 the price at. Because the buying power, I just don't want to put out all that buying power on one trade. That much buying power on one trade just does not make sense. FXI, interesting. FXI. This is just barely fitting into our, it does have contracts. The King and the Queen, I traded this one before. It does have them, but does it have them in January? Let's just wait. See if they populate up for January. Not seeing anything. And again, look at the strikes. Whenever I see strikes like that, it just tells me that it's just, let's see if there's anything in March. No. When I see the strikes and they're, the odd number, they're not whole numbers. Let's see, let's go December 20. You should see all your contracts here. I'm just not seeing a lot of volume on this. Not a lot of volume. I mean, there is some on your 60 delta over there. Let's see. Yeah, see, there's, you got a little bit of volume out there at 8 deltas. Probably somebody sold the out of the money. 1 penny spread, 19 deltas, 3 penny spread on a 30-cent or $30 stock. See if we went out to the 21. See, yeah, there's nothing here. 50 cents and $4.19. Nah, that's because there's no liquidity. So let's see if anything else. XLE. XLE is just too. It's got contracts, but it's just too. The volatility is too low. You're not going to get paid for it, and I'll show you. XLE. January. There's no contracts. Nothing there. Okay, let's go to high options volume. Because options volume is what I want to see. So high options volume, IV rank. We're listing as IV rank going down. Oh, look at coin. Except coin, yeah, stuff like that really scares me. Coin was just been through the roof. It's a Bitcoin stock. I mean, that thing it tracks Bitcoin. Of course, it is Bitcoin. It's Coinbase. And that thing's just been like, if you see it in terms of, I mean, it just literally that I wouldn't take that. Volatility is definitely telling you, hey, trade it. But for a $300 stock, you would definitely have to conduit it. And I don't want to do both sides of a Bitcoin stock just because the nature of Bitcoin is, it can move easily, 10% in a heartbeat. So if we were to do this, we would definitely have to conduit it because it's just so expensive. That you would be doing like, 17 deltas, maybe even, 17 deltas. Or if you're directional and you think it's going to go down, you could do a call spread. If you think, but I don't like being directional. You have better odds of management being non-directional. But look at this skew, this delta skew, way, way out here. We'd be way, way out here to the 520. Goodness gracious. Somebody believes that this thing could continue to go up. And I wouldn't want to, I'd have to conduit it, which means, protect it. So you're looking at 318. Okay. I mean, it's like, do you really want to tie up $600 of buying power? And then knowing that you're going to have to manage it, you're going to be tying up about $1,400 just to move one strike. You are getting paid for it, but it's just kind of like, wow. Maybe if I went to the 16 or the 12, 14 deltas, okay, you're getting a third the width of the strike. But again, you're going to have to, you're going to have to tie up $1,500 one way or the other just to manage this thing. Every time I go into it, I say, how much would it cost to manage it? Hold on. I always look at management of a trade. What would the cost of managing it be? I mean, if you had to move this thing twice, you'd be $2,000 of buying power. You are getting around 1/3 the width of the strike, but is it worth taking $2,000 out for one stock just to try to get that? And this is to January, so I mean, it definitely fits in terms of volatility, and you're getting paid for it. It's just that buying power wise, is it worth using up all that buying power just to hold on to it? Nikola, penny stock. Yeah, that's basically a penny stock, but it is what it is. Do I think Nikola will go up in price? No, because it's just, I mean, Tesla destroyed it. This is basically on its way to zero. That stock is definitely going to go to zero. But yeah, see, there's nothing here. Yeah, this is your in the money. It's $2. All you got is, I mean, basically you're going to spend like, you're basically getting 20 cents on a $2 trade. 20 or 34 cents at a $200 $2 36. Yeah, there's no way. Nikola it's over with for that. Pfizer, we looked at that yesterday. UNG, here's some more energy. I was trying to get into some energy stocks because I have no exposure to energy right now that is of condor nature or of strangle nature. So we did UNG. We did the 21. Let's go to the 13 delta. They believe this thing could go up. Uh-oh. No volume. There's nothing there. 9 cent, 125. There's nothing there. 96 of 282. I mean, it fits. But the thing is, there's no volume. And if we went to the expected move, which is a 21 delta, we went to 22 deltas, 112 out of 412. Nope, doesn't fit our profile because we're not getting a third of that. It's 84.68. I mean, I would make the market come to me if I did this. You got 108. Look at that. Okay, that's only 4. You got 108, 127. If I wanted that, I'd see if that market would come to me, even though right now markets, they're at where they're at. But my thing is, and it's getting more volatile. Let's see. This thing can move $1.20 a day. Volatility is through the roof. It looks like it wants to come down. It could actually go down to the 12 or go to the 16. 12 to the 16. What does that look like? Our strike, okay, 12 over here. Okay, we'd be a little protected to the upside, but the downside, it could easily hit us. But you're getting paid for it. Not much. No, you're not really making much for that particular craziness. Okay. Yeah, this thing could easily pop to the upside. If it popped up to the upside the next day, you'd be down 162. If it popped to the downside, you'd be down 32. So definitely that skew to the upside is definitely scary. UNG, natural gas. It is wintertime, but maybe, and you got Ukraine and all that. So it could easily go through the roof. It's already been beat up quite a bit all year. So there's definitely risk to the upside. Let's check our implied volatility. If we went from the 15 to the 20, 5 strikes out, that's 85, 15 to the 10, or 5, 12 to the, let's see, 12 to 20, that's $8. $8 up, we've got an 85.64, 12, well, we can't even go down there. Look at the implied on the downside, it's just ridiculous. 68, 78, 90. On the upside, but the upside is just ridiculous, even more. The upside, it's just that you've got more granularity to the upside than the downside. Let's check this out. If we go 5 strikes up, 15 to 20, that's 52 cents. 15 to 10, or $5, $5, 15 to 10, Okay, so it's about the same going down. Let's see. Yeah, so 15, 162, 2, 3, 4. Okay, so at $11, it's 49 cents. So it's a lot more. It's definitely much more on the upside. There's a massive skew to the upside. I mean, you could just tell by looking at the mountain. Massive skew. So if I did, so there's, so this could easily eat your profits. Now, if I had to adjust this, again, anytime I have to go into a trade, I always think about adjusting it. Give me 1 second. Okay. Yeah, my sinuses are killing me. So, anyways, we do have some contracts. Okay, we do have contracts where we're at. So the king is definitely happening. We do have contracts, so we could get in and get out. Um, the thing is, I got 22 deltas, 21 deltas, strangle, buying power for 30. What would happen if I had to move this down? Okay, we're still not getting enough, but at least we got dollar wide strikes. That would be, So this thing is definitely it's moving on us. So if we went and had to move this for the 102, had to move it up 141 of 5. So the thing is we're still not. I mean, we're not getting paid like we should to have this trade for January. So from 103 to 112. 112 is the highest amount of credit we could get. The fair price is 103, but I'm coming in on the high side just in case. What that means is this market would have to move a little bit in order for that to happen. The prices would have to move. But I'm going to do it. I like doing that. Again, I like selling stuff expensive and buying it cheap just in case. So UNG is on. We already did United Airlines. Yeah, that didn't have enough contracts. And we weren't getting paid for it. But I love that volatility. Let's take one more look at that. January. Yeah, there's nothing there. Man, I just love the volatility on that. I mean, gosh. And that was the one that didn't have any earnings. I mean, I love the volatility. There's just no contracts. Which you mean, yeah, 210, 262. There's nothing there. There's nothing. 121, 174. There's nothing there. So we'll just sit and wait. Again, volume is king. This valet, I know I don't trade that. It's an ADR. I don't know what that is. Palantir, I don't like the guy. Although there's contracts, a lot of contracts there. I just don't like the dude that's behind it. Taiwan Semiconductor. I haven't traded TSM. SCMI was my semiconductor lesson of the year, and I'm a glutton for punishment. So since I'm a glutton for punishment, Trump's getting in. Taiwan Semiconductor should have boosted when Trump got in. Well, you did have the boost for a minute, but it looks like it settled down. Again, the allure of the Trump trade is gone. This thing can move $12 on you. It's already, it says average of $6. I double the ATR. This thing can move $12. And let's go to, there's no earnings. Let's make sure there's no earnings coming in. No earnings. We'll have to condor it because it is a little bit in terms of the expense. So if we went to, we'll go to the 22 Delta since a condor. 16 is for strangles. I don't mind going 22 for a condor. Okay, since we can't, we're already deltas, 3 deltas, so we will do the 18. Okay, so now we're delta neutral. 84% probability, 69%. This is all good. The only thing is do I want to tie up that amount of money, even though it fits, everything fits? Is it worth tying up? Because if I had to move this, so it all fits. Thing is, I don't want to tie up that amount of money just for one stock. Taiwan Semiconductor. Again, this thing can move $12 a day easily. So I would have to condor it. 186 of 817, it's not worth it. You're not getting a third the width of the strikes. Volatility in these strikes are too high, as well as the other strikes. So it's not even if we did it making it $10 wide strikes, still yet 311, that's 1/5 the buying power. No way. 1/5 the cost. There's no way. So we couldn't condor it. So it's still, in other words, the strikes we're buying are just too expensive to protect it. You're getting some really expensive bodyguards for that. Okay, let's see what else. Yeah, the Boeing went down. The trade we were looking for yesterday, we would have made some money yesterday. It went down 1.2%. We just never got filled on that. AT&T, nope. Okay, IV ranks. Let's see. Intel. What's going on with Intel? 49.50. It's gone up 4%. Okay. Well, I mean, if we're looking at the volatility, this thing could get a lot more volatile. Even though it's gone up, has the ability to move in $2 on you easily. No earnings. Not a lot of granularity, but hey, it is what it is. But let's try it. 21 strangle. 21 deltas, 18 deltas. We got contracts, 98 of 238. I like this. I like it. 85% probability, 69% pop, getting paid $2 a day. You are a little delta long. Oops. Yeah, see, this is the best we could do for delta. The best we could do. Yeah, to make this more delta neutral. That's the best we can do. Yeah. I mean, now we're short deltas, 78 cents and 238. It's still good. 89%, 74%. If I were to move this, if I got into this trade and had to move this, $239, I like this. That's why strangles are much better. You can get more room. By getting more room, you're saving, it's like $20. So if you didn't want room, you had $238. Got more room, 78 of 238. I don't mind. I'm greedy. I like the dollar. The deltas, it's 22 deltas. Now, 22 deltas, 18 deltas. We could go, let's be cheap. We'll say 78, 79, 80. We'll see if it'll fill us at 80. 80 cents and 238. That's the third. Whereas if we went to 22 delta strangle, we were going 22 deltas on each side. No, we definitely could not do the 22 on each side. Again, this thing can actually fall because I'm looking at this. Except Intel it could fill that gap at 28. It'll either get to 28 or 21. Actually, 28 or 18. We'll just say what happens. Either 28 or 18. Okay, so it could get there. 28 or 18. So this thing would have to move. If I did Intel, you could either you're still getting, to move that out, you're getting $2 a day in theta. If I move this up, you're getting 212. So it's very marginal in terms of how much you're getting. So I like the room. I like to get more room on this. So 79.80. Here we go. Now we're getting somewhere. I'm going to see if this thing will fill at 81. Let's see what would happen in a week. If this thing, the 2029 spread is what I'm looking at. If in a week, 2029, so we got 3 on one side. Oh, let's look at our mountain. Yeah, a lot of risk. Okay, so if this thing jetted to the upside in one day, you'd be down 162. If it jetted to the downside, again, you're getting those long deltas. So this thing has got some fear. It's like SCMI and like X, but Intel, it does have some. The volatility is up there, but not ridiculously up there. If it jetted to the downside, you'd be down 62. When I say it's up there, this thing can actually get more volatile. It just barely, just barely to the upside in terms of because it's been a lot higher. We're talking the 107, whatever, the volatilities are up there. So this thing can get worse before it gets better in terms of volatility. So I got to really monitor this. What would happen since I'm at 81, what would happen in a week if I kept this trade for a week? 81 of 236. Okay. That's to the December 27th. That's more than a week. That's like 2 weeks. I'd make 50% in 2 weeks. 50%. If I went out to February, do I really want to hold that strangle out till February? No, because you're only getting, so the 2029, if I did the same trade in February using different deltas, 27, see, there's no volume out there. I mean, I could go to the 17, 15. So I'd be getting 104 of 238, 87, 75, getting paid 161, a lot less. We're more delta neutral. And if this thing went back a week or a month, we went back a month, shoot, be doing a lot more, but that's a whole month. You'd have to hold on to this. February 21st. So if we went, okay, let's change that. If we went to, there's no real contracts out there though. So that's the only thing. There's no contracts out there. So the 17, 15 delta, I mean, you could do this. I don't think it'll get filled though. 104, 107. Not be a dick for a tick, but we'll try the 106 just in case. That means, I mean, there's a little bit more. If I were to do this, yeah. I mean, you're only getting 25 cents more in terms of that. In terms of 25 cents more for getting a month that you're going to have to wait a little bit. See what our mountain looks like. You do have to hold it more to get 50% though. Hold it longer. And that's the 1932. So, still yet, if it went to the up, no, let's go back a month. I like doing what I did before. The 1929. 1929. Or was it? Let's double check that. Let's go back to January. Go and see what we got there. We were 18, 21 deltas. That was the dollar, yet this thing could fall, which would raise volatility, so get some room. So now 1815. Deltas 2029. We'll try to go and get 81 cents. So we've got a third of that profit. We are deltas. We are short some deltas, which means that mountain could go against us. Getting paid $2 a day, 88.73. And we're off to the races on this. See if we get filled on Intel. The Intel, I don't see any, even though, I don't see any earnings on Intel for January. In order to really see if there's going to be any earnings, just look at the implied volatilities. January, let's see where, there we go. I mean, implied volatilities, something's up in December, but other than that, there's no real, around the strike. If this was like 55 or 60, that means more than likely you're implied you're going to have earnings. So we got Intel. Oh, Alcoa. Alcoa is still in the, wow. That was one of the ones I wanted to do a while back. I don't even know if I even traded this. Did I ever get filled in Alcoa? That was one I wanted to do, but I don't think I ever got filled on it. Yeah, we never got filled in those trades in Alcoa. That was last month. I was trying to get into that, but I'm glad I didn't get filled because volatility is still high in this. Although it is an aluminum stock, we got copper already. Volatility is creeping up to the upside. Not to say it won't turn down. I mean, it could easily turn down, but it's definitely still volatile. Of course, look at that. It spiked. Trump. It can move easily $1.60 times 2. That's $3.20. Easily move $3.20 a day. January 17th. We got volume. Not a lot, but there is some out there. Let's go to the 23. The granularity of deltas is not there, though. 2320 delta. 224 out of 454 for January. There's not really a lot of, there's nothing, it's basically a strangle. You can't really move too much. I like to be able to move these strikes around just in case, just in case, so there's not really a lot of granularity there for either that or a condor. If we condored it, 135 of 365, so it fits there. But if we had to move one strike just to go ahead, I mean, by that time, if this thing bounced back and forth, we'd still be getting paid for it. It's just there's no room. There's really no room to do anything. And outside of that, there's no volume. There's volume, a little bit of volume on the strikes, but I would condor it, but there's just, you get paid $2 a day, 78.59, just barely fits in the probability of making money vibe. Barely fits. Okay, 82.64. You would definitely have to, but we'd be tying up 453 of buying power. And then if we had to move this, okay. I mean, I'm not freaked out on it. It's just that there's nothing there. There's no room to move these strikes around. You only got, by the time you moved it, you'd be in the straddle territory. And I try to avoid that. That just means that things move too far from you. Let's check our mountain. Curve. The mountain. Yeah, because there's just there's no granularity there. Still the same thing. A lot of risk to the upside. If it went up there tomorrow, you'd be down 254. Went down here, you'd be down 97. So, but I do like the credit. I mean, there's a gangload of credit there for Alcoa. It's just it's nowhere to move those strikes, and I want to be able to move those strikes just in case. Freeport-McMoRan copper just barely fits in our volatility, yet it's been going up 1%. I even think I tried Freeport-McMoRan FCX, and I don't think I ever got filled in that. Did I ever? Let's see. Did I ever get filled? FCX? Yeah, we never got filled in those trades on FCX, and I was trying to get that back in October. If we did January, it still is up there in volatility. January. Here we go. We've got some room, but then no contracts. There's no volume. 20 delta. There's only one contract, so we'd have to just 19 delta. There's a lot there on the 19 to the upside. 138 of 436. Not getting that third. 83.61. I like that in terms of the probabilities. You're getting paid theta $3 a day. You do have granularity of strikes. If we did this, we're delta neutral, so this is great in terms of deltas. If we did this trade and it moved and we stayed in it for 1 week from 138 Yeah, I mean, you definitely would be making some money. 138 and 441 buying power. Freeport Mac Moran, FCX. Let's see what this thing, Delta neutral. I don't mind that. Let's see what our mountain looks like. There's a lot of skew to the upside. Clearly, you can tell. Look at that. If it went up there tomorrow, you'd be down 167. It went down to the downside, we'd be down 184, which means you're getting paid a little bit more here to hold it. It's just that the higher it goes, the more you lose. Let's see, our what I call the delta skew. So if we were to do this, what am I? I don't want December 27th. There we go. If we were to do this, okay, if we went from $44 to $4 up, it's $1.07. $4 down, it's $1. So there is some slight skew to the upside, but 147. If you look at these are 7 cent, 6 and 7 cent width of the strikes. This up to the upside, it's about 5 or 6 cents to the upside width. There's really no volume, but if I wanted to, I'd rather this market come to me if I took this trade. 142, 143. So if that market comes to me, cool. If it don't, that just means we're getting more liquidity if it does. If not, then this is a trade it's not meant to be. Uranium, CCJ. That was the one that I have to hand it to Brandon over there at Theo Trade. The uranium play, yet I would not do this. If I did it as a debit spread, it would be if I did this, I would play a short-term play of uranium falling back a little bit, but you got the possibility of a nuclear war. I had a dream about a nuclear war. It was weird because I'm listening to these nuclear war, Annie Jacobs and nuclear war movies, and I had this weird dream that there was a massive nuclear war, but it wasn't as bad as everybody says. And at the end of the dream, everything kind of, we were all outside. And since everything was outside, because it was like, again, like the day after, I was teaching these kids how to play piano because there was an electric piano and they had the PA. They were playing some other stuff in the PA, and it was probably something, like some movie thing or something. And I was telling them to turn down the PA and just so I could teach these kids how to play because I was doing a concert and teaching these kids how to play. Then when I went to turn the PA off, I got back and there was a bunch of GIs there. So I was teaching these GIs and these kids how to play piano. It was a weird dream. It was crazy. And I was playing this one thing that I wrote, and I was like, man, this is just like, it was a crazy ass trade. If I believed that this thing could go down, we would do, since volatility, we would do what's called an in and out spread. If I believe this thing can fall between, say, maybe now and March, I would go basically at the money. There's no volatility risk. I only got a 53% chance. Of course, it's a 50-50 shot. We could make 65. I mean, we do have 65% chance of making something. We'd be losing 3 cents a day. Basically, it's 250 to 250. I would do something of that nature if I believe that this thing could fall by March. That January, maybe. Let's see what we got in January. 50-50 in and out spread. If I believe this thing can fall, it's a 50-50 chance. Same thing, same metric, except we're losing 7 cents a day. I would actually take this out to March. But do I want to tie up $300 or about $300, $250? Do I want to tie $250 up on a bet? Because that's basically a bet. A bet that uranium might go down. And my thing is how long to stay into it if I did this. If I wanted to say March, how long would I stay in this trade? I'm only losing 3 cents a day. So if I stayed in it, I mean we're 14 deltas long, so that means that every dollar it goes up, we'd be losing $14. Again, this is just a crapshoot. It's 50-50 crapshoot. If I believed that uranium could go down between now and March because it's just been soaring through the roof. So if it went up $2, I'd be down about 88. If it went up $2, no, let's see, it's at 57. So if it went up $6, I'd be down about $1. I mean, about $100. If it went down, so from 57 to 53. So if it went down, we'd only make 84. So this is not really the trade I want. If it went down, no, we'd only be making 40. If it went down from 57 to 53, no, 57 to 51, that's $6. We'll just say $10. If it went down 57 to 47, although that we're not looking at this thing going down $10, we'd be up. We'd be up about 130. 57 to 67, we'd be down. Okay, about 130. So it's 50-50. Okay. Yeah, around the same. Okay. I thought so it should be a 50-50 shot. I don't want to type that kind of money on this. That's a coin flip. If it were a coin flip, if it were half this, I would do it. But on a coin flip trade, I don't want to spend, that kind of money on a coin flip. HYG. Oh, junk bonds. Let's see what junk bonds are like. Look at the IVX. That would be calendarized IVX. Junk bonds, in terms of thinking that junk bonds would go down, except volatility is already spiked on this. On just a little. So if I did this, I would have to calendarize it. The thing is what kind of liquidity do we have in junk bonds going into? Again, this is all about getting income. The other trades were speculative. This is just trying to get some income going. If I calendarize it, there's no volume. It's not worth it. That's in March. Let's go to January. Yeah, there's nothing there. Okay. Nothing. Let's go to, I've already got metals on. Let's go to, retail sector. Nah, it's not enough volume in the retail sector. Let's see. I've never done Divine Energy, so I don't know. Yeah, see the American Airlines trade, man. GE just barely makes it in. GE, Las Vegas Sands. Las Vegas Sands has some contracts. What's going on with Las Vegas Sands? See if we can get some income. Volatility is on the floor, so this thing could get heavily volatile. It has the ability of moving about $9 a day. $9 on a $30 stock. Look at that. It's telling you. From 55 to 44. That's why you got that what was that, like an $11 move? 55 to 44, 43. Yeah. So this thing can move. It's definitely got very volatile. That was that was DJT. I'm sorry. I thought it was, that was Donald Trump. I thought I was in Las Vegas Sands. Hold on. I hit the wrong stock. Yeah. Yeah, that was DJT. That was the one I was trying to do. Where's LVS? There we go. LVS. There it is. Yeah, DJT is still up there in volatility. It's just ridiculous. LVS. There we go. That makes sense. Las Vegas Sands. It's got okay volatility. Moves $2.40 a day. Sorry, I had Donald Trump stock, $2 a day. This thing could easily get to fill those gaps, 45. It could either go to 45 or 54. So if we were to do this, is there volume in January? 45 to 54. Nope. There's nothing there. Nothing. No volume. I mean, if we went to the 45 delta, the 45 strike, 45, 55 strike, that's at a 22 delta. Yeah, there's nothing on these. Nothing. If we were to do this, okay, that's 4 deltas. Yeah, there's no the delta granularity is not there. You're either 4 deltas long or 4 deltas short. You got the 1822. So delta granularity is not there for me. I like to see, like you're going like 20 deltas or 20 deltas per strike. There's just not a lot of, although you got 86 making $3 a day, volatility would tear you up. You do have a probability of profit is there. Delta granularity is not where I want it. You're only getting $1.33 or $5. No way. Sorry, Las Vegas Sands. Not applicable to this. XBI. Oh man, I haven't traded XBI before. Again, this is just purely mechanical. The biotech. What's going on with biotech? I could already tell that nothing's going on with biotech. A lot of volatility. It just dropped through the roof, which should have brought more volatility in, but it didn't. Can move about $4 a day. Let's see what we're looking at in terms of biotech. January. They do have enough granularity between the strikes and the deltas. 20 delta here, 20 deltas up here, but there's no volume. No volume. A little bit of skew on the upside. 235 of $1,100. Do I want to tie up $1,100 just to make 235? Nobody. Let's see what else we got. Never traded ITB. Free Solar. FSLR, no. I think I still have some stocks I held in FSLR. I don't know if I still do. I thought I sold it. CVS, no. The reason I say no is because of RFK. But if we got CVS, let's see what that looked like. Plus, I always go to CVS for my IMEDs. Volatility is on the floor. It's on the lower end. If we look at the red and green line, it's not up there. We want high volatility. I could already tell it's just not there. I could already tell just by looking at it. January. Let's just see if we get paid for it. We would probably do 14 delta, 17, 14, 17. We're about 3 deltas long. 120 of 570. Nope. No, that's not there. We're not getting paid enough for it. You're tying up $500 just to make $100. That's not. So let's see what else we got. Plus, I haven't checked if there's earnings in there, but I just like to check. Morgan Stanley. Nope. No. I don't know it. Lucid Group. I don't care about that. See, Rivian, the automaker. Look at that volatility. It's ridiculous. I think Rivian is going to go to 0.2. Take a look at Rivian. High volatility, but the volatility came down, so it's kind of back in its midpoint. But I think Rivian's going to go to 0. If we were to do it in January, would we get paid for this to go to 0? Look, the granularity in deltas is not there, so it's not worth it. There is risk. A lot of folks think this thing could go up. We did delta neutral, 91% chance, 80. You're 33 out of 231. No way. Let's see what it would look like here. 65 at 205. Nope. Let's look at the mountain. If it went up here, you'd be down 90. Went down here, you'd be down 23. But your deltas, you're just like ridiculously delta, your deltas are right at, you'd be damn near in the money fast. So anyways, nothing there. All right. So anyways, we got a few trades that we're working on, about 2 or 3 trades. X is still kind of, let's see if that X is applicable. We still got that trade working on it on X to see if that'll move us. UNG we got a few trades on there, just to see if one of those feel, if all 5 of them feel cool. So we got the buying power. So that's why I'm glad I freed up that buying power on SCMI. Let's see where markets are at. Markets are, oh, they're down even more. Okay, so is he really getting hit? I could have stayed in that trade, but man, holding on the $2,000 just for, that, I mean, it was getting painful. When I saw the buying power spike after I moved that strike, I was like, oh gosh, I could have gotten out of it today with a lot less, you know. Instead of the 166, I probably would be paying about $100, and I would have got out at $100. But it is what it is. Anyways, yeah, we'll see if one of these get filled. Again, this is just for income. Bottom line, these are income trades. So, anyways, there, brother Will, yeah, we'll see if any of those fill and see what happens. Hotep.